Today we're going to be going over 3 great examples of trend trades in the currency markets. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Today we're going to be going over trend trades and looking at some textbook perfect examples, not only on gold, but the pound and the euro. Yesterday, we had a couple examples of false break reversal for a trend trade in the London Open, Europe London Open for the euro. We had a trend trade on the pound, and gold trended right from the beginning of the second hour of the Asian session. We're going to talk about that. We're going to talk about how the weekly lows were hit after Monday took out Friday's highs. Great example of a day that continued to trend for the bulk of the day. Again, before we get started, I'd like to thank everybody for taking a moment and hitting the like button. Tremendous feedback from a lot of traders, and again, trying to just maintain the quality of the content and improving things every single day. Hopefully that's helping a lot of traders, and again, we're going to talk about the first hour trade entries. It's been a busy morning here in Perth, lots happening. It's been a hot couple of days, been to the beach, been doing a bit of chores around the house, taking the kids to school, and the Asian Open. Beautiful example of a first hour trade that we will review today, but just today reviewing our simple system, trend trades, gold, 15-minute and 1-minute for me, euro and pound, 15-minute charts, and then Asia, London, New York, the timing window, gold. Typically, I like to have a trade in that first hour. It has been giving off some absolutely perfect opportunities in the first hour of every single session. And again, for me, part of that is to be in and out of the market. I don't really care how I get them. If I get them in that first hour and it's fast and it's quick and it's without or very little stress in terms of being able to put size on. It's when I hang around, and I talked about this in this post earlier today, if I hang around and look for the stuff in between, it's usually when most of my mistakes have occurred, especially later in the US session. For me, it's late here in Perth, but again, focusing on the best trade setups, knowing exactly what you're looking for. Now, today we're going to show an example on all 3 of these currency pairs of textbook perfect trade setups using the previous day's high and low, the Asian session, false break reversals, and the bar heading into the 12 candle window. Textbook perfect setups. If you have not grasped the concept of a pin hammer, and on gold we're going to talk about a pin engulfment and pin hammer on the 1 minute on a W formation. On trend trades, you want to often ask yourself, have other time frame traders already been triggered into the market? So we saw some examples on gold where each new high triggered 4-hour and 1-hour traders throughout the entire day, and the market would pull back into those ranges and continue that move. So those other time frame traders were in profit throughout the entire day without being stopped out. Creeping trends, a counter trend creeping trend will typically have 3 pushes, and then the trend will resume. And again, tying that in with our timing window and understanding the round numbers and the levels, and layering on top of those breakout pullback false breaks, and then also understanding where the other time frame traders stops are sitting. So if that move is to resume back, now we're going to be triggering other time frame traders into the market, 1 hour, 4 hour. Again, very important to understand that. And if they're already in the market, if the market has pulled back 25 to 50 pips, that's a typical stop hunt into a move when other time frame traders are triggered into the market. We may not see that quite as obvious on the euro and the pound, depending on how the day is trading, where we're at in the week, the template, etc. But yesterday was a classic example. Previous day's low of the week, it was Tuesday. They reversed off of those levels, layered on top of Asia, and continued into the Europe-London 12 candle window for very strong 25 to 50 pip moves. In gold, obviously, that was trended 400 pips over the course of the entire day, but there was 100 in Asia, 100 in London, 100 in the US session. So fantastic opportunities for traders. Now again, setting profit targets, taking money off the table. You may have got 50 pips. You may have gotten more than 50 pips. But the market comes back into some of these moves to stop hunt traders out at break even, and possibly maybe even for a negative pullback. Again, the importance of learning to take a profit, especially in that first hour. If they're expanding the range on both sides, it can put traders who are in profit into a negative or a loss. So timing window, we're going to look at those on the charts. 3 pushes against the trend, layering typically usually on top, but you can count these 1, 2, and 3. You'll end up with a W formation. Daily low taken out, peak formation traded back into, a layered above and back into for the continuation move. Low of the day, low of the week, low of the month, low of the year on gold. Fantastic opportunity for traders to be looking for a reversal day. So again, I like to try and get that first hour. Gold offers it almost every single session. We may not see that in the other pairs. One of the other instruments that I'm looking at right now is the S&P at the New York Equities Open on the 1-minute chart is offering some massive opportunities for 100, 200, and 300 point moves. So again, traders are looking at your decimal points on gold and the indexes. I bump it over one number, and some traders are misunderstanding. They're looking at it like a 50 pip range is a 500 pip range, and it's actually 50 pips. So calibrate that with your platform. Know exactly what your pip value is, that you're not getting a pipette value in there. And that full pip without that decimal point is typically going to be in a normal pip range of movement. So breakout, pullback, continuation. We can get that after a false break reversal. That false break reversal breaks out again out of that reversal, pulls back, and continues that move. But we're going to look at those examples now on the euro, on the pound, and gold. And again, thank you for a ton of feedback. It's been a crazy morning here, running around, lots happening. So traders, we're going to have some great opportunities. 3 things markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse, or they stay range bound in a trading range. That's it. So don't make it too complicated. Master some simple setups. Yes, you're going to get, you're going to miss some trades. It's going to be erratic, or it's going to be complicated on some days, or messy, whatever that is. Focus on the best trade setups. Focus on being able to scale those up in size and trade them better. Don't worry about chasing pips. Worry about mastering some simple setups that are scalable and move them up in size. Get better at them. Keep it simple. Have a great trading day, and may the markets go with you.
Good day, traders. Stacey, Burke, continuing our discussion on some textbook perfect trade examples of trend trades yesterday. The euro and the pound and gold. I did not trade the euro or the pound trades, but I did trade the gold trades, which we'll go over last. A lot of people asking about euro and the pound, and we're going to review those today. Keeping things simple, coming back to our original premise, previous day's low taken out in Asia and reversed with a W formation in our Asian session. So this is prior to us coming to the screen in the Europe-London window, the Europe-London window and the New York window. And again, understanding that the false break reversal, the market breaks the previous day's low, pulls back, hits it a second time at the open of the Asian session, giving us our little stop hunt to the low on traders that are in early, and a reversal for a W formation, breaking above that lower swing high prior to the low being put in place. So breakout, pullback. And then in our timing window, the last candle of our Asian window, first candle of the Europe-London window, we get the pin hammer. This is a great example, again, understanding that other time frame traders have the 1 hour, the 4 hour bar. Breakout traders are up top. So they've pulled back away from that, headed into the Europe-London window. Pin hammer, first bar entry, 1 bar stop, and targeting the round numbers are our first major level of resistance. We have the U.S. session highs. We have the London session highs. And again, we could be targeting the previous day's high. But again, as we get higher up and the timing window kicks in, we're getting towards the end of the 12 candle window, as well as now going into the gap time. We can see 3 clear pushes on the euro, and understanding that on any given day, the euro and the pound may only move 25 to 50 pips. on a range extension. But point being made, false break, reversal, breakout, pullback, pin hammer at the open of the window. We're beneath the high of the day, and again beneath, triggering other time frame traders. So you'll notice in a lot of the other trades, they triggered the other time frame traders, especially on gold, right on the first minute before pulling back 25 to 50 pips, triggering other time frame traders into the market, then putting heat into them, hitting stops on the opposite side, expanding the range, and then continuing the trend in whatever direction they're intended. But this is a great example. Low of the week. So Monday, Tuesday, Monday's put the high of the week in place. Tuesday reverses, pulls back, pin hammer at the open, 1 bar stop. Don't make it complicated. Don't look for cryptic, messages or anything else about the market and Fibonacci's and all these other things. Keep it simple. A 1 bar stop, asymmetrical risk reward. You're targeting the highs of these ranges. We get to double zeros. The market peters out after it hits stops on traders that have shorted the swing from the Asian session. And again, as we get closer to the end of the timing window, taking money off the table if you haven't had a preset target, but that's breakout, pullback, trend day. Even though it's a reversal, it's still a trend from the move off the bottom. It's a breakout, pullback, and a trend, and again inside of the high. And the breakout trade is when I would go to break even. So they break through the high, triggers other time frame traders. This should fuel that move up as we saw yesterday. The pound, very similar, but again, you'll notice that we potentially had sort of a day zero, a 50 pip box. It stayed range bound on Monday. And then the market proceeded to form a very similar double bottom formation to the euro, except we did not violate the previous day's low, but we did hit stops from the US session low. The market came back though and traded through the high of the day. And again, count the creeping trend down. 1 push, 2 pushes, 3 pushes down into the open of the session for a pin hammer engulfment just below 50. And also notice, similar to the euro, other time frame traders are not triggered until the breakout. When we get this entry inside, the thesis is that this market should explode through. If the market pins up on the next candle and goes sideways, we could see a stop hunt back down. But the market has a creeping trend down for a squeeze, an explosive move through the high of the day, for a 50 pip move up to the double zeros before pulling back and consolidating and then continuing that trend in the US session. But again, understanding just the concept of the breakout, pullback, trend trade, 1 bar stop right at the open of the session. You're in, target set. Even if we do a measured move, we can do a measured move, a full range expansion of the Asian session. We can do a 2 full expansions of the high-low of that breakout pullback. Again, keep it simple. Double zeros, 50 pips, whatever that market may meet resistance. The euro had a little shorter of a range, but a classic textbook example. Print this off, put it in your playbook. Breakout, pullback, trend trade, low of the week, trading inside of our box. Remember, price is in a box. They go down, they pull back, they hit it a second time before reversing, layering on top, continuing the move up to the 50 level, creeping trend down, and the explosive continuation for the trend trade in the long direction. So again, looking at gold, we talked about Monday taking out Friday's high. Just bring this back up. The pink line designated Monday. We took out Friday's high with the 3 peaks and then proceeded to take out Friday's low. Friday's low by the blue line. But yesterday in the Asian session, that market reversed and came back above the Asian session high, but also back inside of Friday's range. Again, talking about breakout pullback, so false break, reversal. They took out the low of the week, the low of the month, and the low of the year. And they've pulled back inside in the Asian session. They've layered on top of that lower rectangle. So as we head into our Asian session, we are now targeting the high of the US market. And slightly different from the pound and the euro, we don't have the pin hammer, but we've got the continuation and the engulfment But on our 1 minute chart, which we'll look at in a second, we had a great example of a 3-push pattern into the quarter level below the previous hour's high for a strong continuation move and an explosive engulfment pin hammer on the 1 minute at the London Open for a continuation in the long direction. The U.S. session then also gave us a horizontal range just into the open of the 12 candle window and a shortened W engulfment out of a rectangle for an explosive 100 pip plus move in the long direction. So again, understanding Monday, Tuesday will often establish our trading range. Monday obviously put in a low of the week. Asia traded back into that peak formation low before reversing and then consolidating on top and continuing that move. Now again, just talking about range expansions, targets, different things. There's different ways to measure this. You could do a full expansion of the U.S. high-low range for 2 full expansions, which the market hit. There's different ways just by looking at your boxes. 100 pip box. This was a 150 pip range. We could do 2 times that expansion, which takes us to 450 pips. And this market may still be continuing in that long direction, but again, we took out the previous day's high in the U.S. session, and then we see the pins up to the top of the 00 box. So we talked about the reversal, the 3 pushes down in the Asian session and the engulfment on the 3rd push, giving us our shortened W. Yesterday, that actually, the market continued to move from that one long entry trade for the rest of the entire day. So traders who held on to that from that engulfment on our 3-push pattern, again, 1 push, 2 pushes, and a 3rd push into the peak formation on our 1 minute. Then we layered on top in our second half of the Asian window, as we talked about on the 15-minute chart. So again, coming back into our Europe-London window. So again, we had 4-hour traders breaking out in our gap time towards the end of the 12-candle window of Asia. So 4-hour traders, 1-hour traders are in the market. But in our gap time, they go into consolidation without going any lower. So we have a layering of this heading into the Europe-London 12-candle window, and it continues to go long again. And you'll notice as we head into our Europe-London 12-candle window and the beginning of a new 4-hour candle, there's 1 push, 2 pushes, 3 pushes into the quarter level for the continuation of the long trade with a bullpen hammer, and then the breakout for the continuation of the long trade for a 50 pip move. Now this is important to understand. This high is the previous 4-hour candle high and the 1-hour candle high. The creeping trend was down into the quarter level before they continued the move. They did not break that high until the breakout. So as opposed to a stop hunt that goes vertical in both directions, this is a continuation of a trend trade. We have a trend line that's intact. The market continues to move in the long direction. We come into our London Open. The market again has put a high in place in that first hour. We have other time frame traders in the market, and they are currently in profit. If they've traded the break and they have a 1-hour stop or 4-hour stop, this market is continuing to move in their direction. The London market opens down low. First hour puts the high of day in place. 30 to 45 minutes, they put a high of day in place, continuing the trend. The London market opens, puts a low of the day in place. Then they come back again, 1, 2, 3. We're going to blow this up. This pattern is important to understand. We get the 1, 2, 3. We get an engulfment and a pin hammer on the 1-minute chart for our second side of the W formation. We get the explosive breakout pullback continuation. The market takes out the high, triggers other time frame traders on 3 pushes, 1 push, 2 push, and a 1, 2, 3, before coming back and stop hunting into the original breakout. Okay, they don't stop out the W, but they stop out the second leg, and then we get the little consolidation inside of the original breakout with our our W formation. This pattern will show up all the time on a breakout pullback continuation for a W and the strong move back in the long direction. Very important. Now again, we get to our high being put in place, and we see a creeping trend down. One push in our gap time, 2 pushes, 3 pushes, and the continuation, and again the same scenario. Engulfment, pin, hammer, and the continuation of the long trade. Breakout, pullback, continuation. Heading into our 12 candle window, the market has put a new high of day in place, and we see the same scenario. 1 push, 2 pushes, and a 3 push pattern into the open. We see a breakout expanding and hitting the stops on the lower highs for pulling back and giving us an engulfment pin hammer on that second leg in that first 30 minutes. And then the market explodes back, and again understanding that the high of day is below. We have our other time frame traders are in the market on that new 4-hour candle, and the market pushes up through the highs, layers on top, and consolidates on top of the breakout underneath of the high. This is a telltale sign that the market is poised and coiled to make an explosive move to continue that direction. And again, for traders who were in this first hour trade, there was 50 pips in that initial move. If you held on to it, this market went over 150 pips in the long direction. So again, trend trades, breakout, pullback, continuation. You'll notice the horizontal consolidation at 50, hitting stops, pulling back, engulfment, pin, hammer, and continuing the move beneath the peak formation, and then the explosive move to new high. So hopefully you got value from today's video, traders. Breakout, pullback, continuation trades, false break reversals off the lows of the week, pulling back into the range, breaking out, pulling back, and continuing with trend trades, first bar entries on the 15-minute pound and euro. Have a great trading session. We'll probably see some very large moves today. Have a great week. May the markets go with you. Hi traders, it's
Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.